So is now a good time to invest in international stocks compared to US-based stocks? This is a pretty common question, and it's actually one that I received in the comments from a subscriber recently. And so what I want to do in this video is answer that question the best I can for you all and for him, and we'll actually dive into the ETF that he referenced. This is the iShares Core MSCI Total International Stock Market ETF, ticker symbol IXUS. So I'll dive into the details of that ETF. I'll compare it to a couple different funds. And at the end, I'll let you know if I personally would invest my money there. Hang tight. Let's go through it together. All right, welcome back to my channel. I built and sold a tech company, and now I focus on investing. That's what I talk about here every week. If it sounds good, hit the like button, hit the subscribe button. I'd love to have you join us. Okay, so let's jump to the computer. I will just go through this ETF very quick, and we will answer some key questions you need to know. All right, so here we are on the computer. Let's take a look at this ETF in a bit more detail. First, we need to know it's from BlackRock, so that's who has created this ETF. And what IXUS is trying to do is just track the international stock market. You can see it here, mostly of large and mid and small cap non-US equities. If we scroll down to performance, you can see here that it shows the cumulative returns of this ETF. And over the last year, it's down about 25%. In fact, it's down over the last 5 years. So here you can see the top holdings. I like this right on the BlackRock website because you can start to really dive deep into the companies, but most people typically care about the top 10. So here you can see Taiwan Semi is right there at the top. Nestle, some of the other names you kind of would think about: Samsung, Tencent, Shell, AstraZeneca. And then I thought LVMH was actually pretty interesting because compared to some other ETFs, that is not a major holding in the top 10 that I've seen. Let's jump over to another website. This is ETF.com. They do a really good job of breaking down funds. And I thought it'd be cool to take a look at the top 10 countries within IXUS. You can see that Japan is number one, 15%. That's pretty high up there. United Kingdom is about 10%. And this is what I really wanted to call out. The Hong Kong kind of Chinese holdings here is about 9%. And jumping over really quick to VWO, this is the Vanguard Emerging Markets ETF. This is a little bit more risk, and some of these other emerging countries, as you can see, this has 24% exposure to Chinese-based companies, which is far more higher, about 3 times higher than this international IXUS ETF. And so that is one factor. I just thought I'd show you that based on a previous video that I did here on the channel. A couple other things that we should talk about is that this ETF holds about 4,200 holdings, which is a lot. So it's pretty diversified across a lot of different companies. And then you have this distribution yield of about 4%. Which is really good, I think. And there's that tension, right, between the capital appreciation, watching the ETF's stock price rise compared to a dividend payout or lower volatility. And so that's something to factor in when you think about this. Now, if we compare that to VTI, this is the Vanguard Total US-based stock market. You can see there's about 4,000 companies and then a distribution yield of about 1.5%. So much lower, but you will see later when we jump into the charts that there's a reason for this. There's a trade-off. And one more thing I wanted to touch on is the net assets. So if you see this here, this is back to IXUS, $29 billion of net assets. So that's just basically how much value is in the fund. I like to look at this to really understand, is this a big fund? There's a lot of investors or not? So that's pretty huge. But if we jump over here to VTI and compare the net assets here, it's 260 billion, basically 10x the size of that ETF. Okay, so let's jump over here to some charts and take a look at IXUS's performance compared to a few other options. So right here, you can see that year to date, it's down about 17.6%. Now this number is a little bit different than what we saw on the investment website. That ran through September, which isn't factoring in this nice rally here we've had kind of towards November. If I go to the 5-year chart, you can see it's down about 7% over 5 years, and then all time from back in 2012, about 21%. So let me go back to year to date. So if I compare this with VTI, what we can see is it's pretty much performing in line, which I thought was kind of interesting. But the picture changes as we change time frames. So 1 year, you can see VTI is a little bit less in the red. 5 years, look at this. So VTI has performed significantly better, 50% appreciation over that time frame compared to down 7%. And then if we zoom back to where, side-by-side comparison since inception, it's not even close. 21% on IXUS versus 178% for VTI. So if we start to answer that question from the comment specifically, what is a better investment, VTI, US-based stocks, or something like IXUS? Well, you can see here in this time frame, at least this last 10 years, that VTI was absolutely significantly better, just in terms of the capital appreciation, the returns, even the dividends, as that all compounds. That's where I would have wanted to put my money. But as we always say, past performance does not indicate future success. And I think that's one thing to keep in mind moving forward with a lot of the changing economic order and trouble that's out there in the economy. I'll show you one more thing. Let's just throw a third option here, which is QQQ, where I've been putting a lot of my money recently. And take a look at this. I need to move my face to properly show this. So if we take a look at this chart, look at QQQ, up 341% over the same time frame. And at the peak, we're talking 500% compared to 50%. So just really, really incredible. I guess that's 10x better performance. And so I think what I leave you with is this. Most investing advice would recommend don't just pick one or the other. You should have a balanced portfolio that has exposure to US stocks, international stocks, bonds, different types of investments. And so I guess that's probably the recommendation I would make is think about that. I wouldn't put all your eggs in one basket. The other thing I'll leave you with is that US-based stocks just historically have been superior in terms of innovation, and disruption to markets and economies. And I don't think that's going to necessarily change dramatically in the next decade. And that's exactly why I'm investing in tech and US companies specifically. All right, I hope that was helpful. If you want to dive deeper into another international stock ETF, I did a video about VWO. You can find that in the link in the description. And for all my ETF reviews, I have a playlist down there too. We'll be back in the next video. I'll see you then.